Hey, welcome to the Closing Beat, everybody. Well, it's only Tuesday. I thought it was Wednesday for the longest time there. It's only Tuesday. So happy Tuesday. How you doing out there? Welcome to the Closing Beat. It's a quick stock market update show with education. We're teaching advisors here. We like to say that we're just always trying to teach why something happens rather than being like, oh, just expect this to happen or just, be excited about this. We love teaching things. We do wine and wealth classes every Thursday. Last week's was really awesome. Strategic thoughts about money. And specifically what types of examples that we can give so that you have something to think about, get your brain working a little bit. Our FinTips episodes this week, they're free. You can go on our YouTube channel, check them out there. I hope you subscribe. That'd be nice of you there. Made a case today for a soft landing. We explained what that means, of course, taught you about that, and then said, well, there's a case for it, and how will the Fed track that? So some data that I guarantee you no other financial advisor has really published or tried to make public so you could learn a little bit about it. And this coming, tomorrow, right?
Yeah, tomorrow.
Yeah, we can hear you.
I'm checking my earpiece here.
That's part of the requirements. If you're going to work for Jazz, you have to have a little geekiness inside of you there. And so, Eric, what do we got going on tomorrow?
Yeah, so tomorrow, so yesterday, I mentioned on the show that we were talking about inherited IRAs a bit. The new RMD, the IRS came out with this whole thing saying, hey, you thought you were doing it right, but you were wrong. And so I'm going more in depth on that with the FinTips video, really just to dive into this, because the biggest thing that people could make the mistake on is the RMD. If you don't take it, you get like a 50% tax on that RMD. So you really got to be careful. It's one that if you mess up, it's going to cost you big time.
By the way, if just saying, every client that's missed an RMD, I've helped them get out of that 50%.
Just saying. I like that. Man, good. Look at you. Look at you.
Not one person's ever paid that 50% penalty. But he's right. You do have to pay.
Do you pat yourself on your back like this? Like, would you
I
do
ask
that
my wife
sometimes?
to sometimes, at least twice a week, and she won't. She won't do it. Anyways, thank you, Eric, for that. That is our FinTips video coming up, and Eric, you are free to go, man. Enjoy the rest of the day.
I'm out of here.
He's leaving. He's
I'm
going.
out.
All right, man.
I'm out.
We'll see you there. Hey, market-wise, we have so much going on here. There really, really, really is a lot going on. CPI numbers, that's the inflation number that comes out. Actually, tomorrow's the PPI numbers, the inflation that producers pay. Then we'll go into consumer inflation, which is going to come up the day after, which is Thursday, sorry. And then we have earnings starting Friday. Really, the big part of earnings is starting on Friday there, along with the Fed minutes coming out. So there's really a lot. And, we're all focused on the Fed right now and what they're going to do and how all that works and all that great stuff. So don't walk away, right? Not to mention bonds are back open here today, so a lot of action there. Let's get started with the good stuff here. I'm going to go over to the S&P. We'll start the day there. Did you know... Well, let's start with today. So the S&P, a little bounce, right? We were positive for some of the day, but at the end of the day, man, they came swinging hard. There's the bears right there towards the end of the day. Just brutal push lower towards the end of the day. Stocks and bonds remain very much correlated until right about here, about noon. That's when they kind of disconnected, which is a good thing, by the way, because if I can bounce over to bonds real quick, who's going to give up on this, right? We talked about the 60-40 portfolio. Anybody that's using bonds in their portfolios, maybe you're closer to retirement, target date funds, you're using some safety money. Bonds are just begging you to get out. You just know the second you get out of bonds, they're going to bounce, meaning rates will come down a little bit. So that's right there, just oversold, ready to go, waiting for that final throwing in of the towel by the retail investor. So careful there, because you just know the second you get out of those bonds, man, who's going to get weak and fall out of those bonds there. But anyways, talking about the S&P, we did finish the day a little bit negative there. Now, I want to point out some good news. Everybody's all doom and gloom right now, right? I could do that. I could give you all the doom and gloom data. I kind of did for clients in the notes from Jazz email just to show you. But what if this just turns out to be fine? And here we are, doom and gloom, and the market goes, everything's fine. Look at that. And you miss. You can't miss out. I've shared some of this data with clients that you miss 5 of the best days over a long-term 30-year period, you're in big trouble. You miss 10 of those days, you miss 1 month of those days. It's really hard to claw back from that. But it's so hard to be in the market when things like this are going on. I get it. People don't mind pullbacks. They mind pullbacks that don't bounce. And that's what we have right now. We got pullbacks that just refuse to bounce there. But some good news. We are entering the best 90-day period for the stock market, period. Right? The next 90 days are the best, in fact, for the stock market there, if you're looking around there. It's in the 100th percentile of performance. Compare it to any other 90-day period. That means it's the best, right? It's a fancy way of saying that. It's positive 81% of the time over the next 90 days, and most people know this to be some of the stronger times of the year. So the fact that we have a discount and we know we're getting into a strong period, this puts a little good news in there for you. Let's take a look over here. Sector-wise, maybe you have some sectors. Maybe you're just spread out and you're like, oh man, I don't know. I've got some real estate or whatever. I'm going to bump this up so you guys can see. Industrials. It is the best 90-day period for industrials. You're kind of already starting to see that. Materials. Almost the best performing period. Tech, consumer discretionary, financials, and let's throw in consumer services, communication services there as well. It ranks in the 90th percentile or better for all total periods over any 90-day period. So how do you not just nibble a little bit, right? You got to be running into the fire, not running away from it. And I get it. Some people can't handle that, but we got to talk about risk, right? Maybe that's just, not your style. We got to approach that. So I wanted to share that with you. If you happen to be in real estate or utilities, they tend to take the rest of the year off, if you didn't know that. And, some have been beaten down pretty good, as we shared with you yesterday. So something to keep in mind. Now, if we look at the markets over here, I should say, in short, you should know that the stock market right now, next 90 days, the best period ever when you compare it to any other 90 days. That's a breakdown of the sectors in general and how they perform. You can see which sectors are usually leading the market higher. In other words, if we know we're going into a good time, and I'm going to share some midterm election stats with you as well, if we know we're going into that time period where things perform a little bit better, you got to at least be paying attention, be shopping, be building a watch list, etc. So something to keep in mind. Moving on here, if we go over to the charts, we can actually see the NASDAQ was down, made fresh new lows here today, Bitcoin did not. Bitcoin is around the 19,000 number. It's been sitting there doing a whole lot of nothing for months and months. But I want to point out the Russell 2000. Again, the Russell 2000 outperforming the markets here. Small caps currently sitting at a 25% discount relative to large caps if you compare it to this time last year there. And it's not just a price discount either. Often we look at charts and go, oh, that's cheap, right? I want to buy that, or I'm scared of that. You're either one or the other. It just depends on your, makeup, I guess, there. Currently, the Russell 2000, small cap stocks in general, are trading at a lower valuation as a whole compared to large caps. And when I say large caps, I'm just using the S&P as this example here. Now, if you compare forward earnings multiples over the last 20 years, you would find, from a fundamental standpoint, that small caps typically trade about 3 to 4 times higher than large caps, but they're trading at a discount here. Currently, small caps are trading at about 2.4 times higher on a forward earnings basis there. So they're technically cheap from a price standpoint and cheap from an overall valuation standpoint. So if that's interesting to you, just something I wanted to share with you. If that's not interesting, let's take one extra step here, because I did a YouTube short, the shorts, you do your thing real quick there. Well, I did one, and I was talking about food prices because that will play into inflation. We're about to get the inflation number. What's it going to say? Well, take a look at this. Here is the food input inflation number. And then all I did, so the light gray over here, this is the basic inflation for producing food. That's just a simple way to say it. The cost of your goods going into the product that you hopefully eventually will sell and make some money. Obviously, we've seen the inflation there. Basic forward-looking analysis is a simple algorithm you can use just to project what could happen going forward. What's the probability of inflation falling or rising? We see that inflation, in terms of the cost of goods that it takes to produce this food, is actually pretty much peaked, right? So what does that mean? Do you get cheaper food? Right? Are prices going down? Sadly, no. Probably not. And here's the reason why. We can actually look up the percentage of in-stock items by category. Right? There's any level of data you can track these days. That's where we spend our money instead of, buying fancy things. But here's what we have. Let's just give you an example here. My favorite down here, candy. So if we look at candy, last year, 88% of the shelves were filled up, meaning 88% of the time, you'd go try to get that candy you want to buy, and it was in stock. 12% of the time, it wasn't there. It was out of stock. Now, this number is a little bit skewed because we're coming out of that that COVID time period where everything basically shut down. Look what's happened this year. We're only 89% in stock, meaning we're 11% out of stock, right? Now look through some of these things here, right? As you look through, there's only a couple areas have gotten better. Your ketchups and mustards and things like that. You can come down here to some, we basically bulk fill up the refrigerated column there, but we don't have a big change year over year. Take it a step further and we go, well, what happened last year? Right? Were there a lot of sales? These are all the promotions in there. So this is broken down by quarter and by year. So for example, in the first quarter of 2019, lots of promotions. Hey, that's exciting. 2020, less promotions. Well, the first quarter, we didn't really have COVID severely just yet, but look what happened in the second quarter. No promotions. Why would they promote? They're basically selling out of, remember people buying toilet paper? Why would you have a sale on toilet paper if everybody's buying 100 things of toilet paper? You go into the third quarter and fourth quarter, very low promotional events happening for different products there, right? Well, look in the first quarter of all the last 4 years. Promotions have gone down. Second quarter, promotions have gone down. Third quarter, promotions have gone down. This year, promotions are the lowest they've been in 4 years. So in the fourth quarter, why would somebody go, hey, we have a lot of candy that's not on the shelves? If it's not on the shelves, then why would we have a sale? We can't get the product, right? We want to see shelves that are filled, and kind of like Target's likely going to be announcing at their earnings there that they have excess inventory, and so they may have to have some sales to burn through that inventory in order to make room for the holidays. By the way, their holiday inventory is probably going to be high as well, but we'll find out eventually. So the bottom line there is, if we were to just real quickly go through this, you have costs of goods for food probably peaking there, but we're not getting enough of it back on the shelves yet. And because we're not getting enough of it back on the shelves, why on earth would you have a sale? So the cost of your end purchase of food is likely not going to be going down, at least for the rest of the year. So sorry to say that, but I just want to point that out. Now, what do you do? What does that have to do with stocks, Dustin? Right? What stocks will likely be benefiting from that? What stocks will get hurt from that? Like I just mentioned, Target having a bit of an inventory issue and likely continuing to have an inventory issue. So is that going to cause them to sell products at a higher price, which means they'll make a bigger profit? Probably not, right? So does that mean now's the best time ever on the history of the earth to buy Target? Probably not. I can't tell you what to do, but it gives you a chance to actually take a look at things like that. Poor food prices, in particular my candy. That's where I'm really frustrated about that darn candy there. But it's what it is. Okay, looking around here, gold very quiet today, not much going on there. I mentioned bonds already showing at least a little bit of a bounce there, but it did get quiet towards the end of the day. Oil continuing to pull back. That's a good sign because my daughter just got back from California and I found out how much gas costs in California. You guys are crazy. It's literally double what it costs here in Florida. What's the deal with that? I feel bad for you guys out there. Anyway, so looking around the market, that's what you have. We're going to look at some individual stocks here. The casinos crushed here today. Look at Las Vegas Sands. Look at Wynn. Big pullbacks over the last couple days. And I want to point out Netflix. Big rollover here in Netflix. They've got a lot of competition coming their way. And also the number of app downloads is starting to dwindle, right? It's been declining. The number of watch hours compared to Disney Plus, compared to Amazon Prime, those are the two that we would probably categorize them or compare them against. Hulu could be in there as well, but they're not really competitors. And so is Apple, but they're not really competing on the same level just yet. Nonetheless, you got a reason for Netflix to be moving lower as well. Probably report a basically inline earnings, by the way. Also, I want to point out semiconductors. A lot of those making new lows. There's CLAC. You got Lam Research as well. One way you can look at the semiconductors as a whole is you could just go SMH. That is all the semiconductors in there. It is weighted a little bit more towards Taiwan semiconductors, so that will pull it down just a little bit. But now you got somewhere to look. Moving on to stocks in the news. There's not a lot, by the way. I'm just going to throw that out there. Wasn't a whole lot of stocks in the news there. American Airlines. So they actually raised their guidance going forward by a lot. So they sort of pre-announced this, but just pretend they didn't. 13% higher sales than compared to just before COVID. Remember, so when we compare sales, there's kind of an asterisk in there, right? So we're usually comparing it to 2019 now, whereas usually we just look last year because of that large event and global event there. A lot of times now we'll just say, airlines, how are your sales compared to 2019 when things were really good and we didn't have all this COVID mess in there? So anyways, they were pretty optimistic about that. And Apple, American Airlines, at least trying to put a little low in there. We'll see. All right, Meta. These guys are officially terrorists. Well, at least that's what Russia says. Meta getting added to the list of terrorist organizations. Well, that's enough to move the stock a little bit lower, but do we trust or care what they say? I don't know. Royal Caribbean, pulling back just a little bit here today. Royal Caribbean, couple things, right? First of all, big sales going on here with Royal Caribbean. I was just telling Eric about that, just kind of looking around. I'm not going on a cruise or anything, but I like looking at pricing and kind of keeping up with things like that. Hey, not too bad there. They got a lot of things going on around the world. They're the second largest cruise liner in the world. And debt is an issue there. But as I look around and try to stall for a minute, I can't figure out what the news of the day was on this one. So I'm just going to be honest with you. We're going to move on. Just say, hey, they got some sales coming up. We're going to go on a cruise, 3-day cruise, real cheap out of Fort Lauderdale. It's pretty cheap. Coinbase in the news there. Google picked them to take over their crypto cloud payments. And obviously that's great news for them. They could use that because crypto transactions have been declining, which means less revenue for them. They're not making as much money on the spreads there, so maybe they can make a few bucks there. The real news of the day, which moved these two stocks the most, Uber and Lyft, their government's back to saying, hey, the people that work for Uber, these contract workers, maybe they should be counted as employees. That's not really fair. And at the end of the day, all this is a tax revenue play. It's not a conspiracy theory or anything. You notice the little things that the government's starting to say now, like this, where, hey, you should treat them fairly. And they're making that argument. It's really not nice to do, but they're making that argument because if you treat them like an employee, they get a little bit more revenue. Social Security gets a little more revenue, et cetera. And, payroll tax, all that happy stuff. So that took down Uber today. It took down Lyft to the tune of 12%. Is this going to be just like the last time? Remember when this was a big deal out in California and then it just kind of went away because they didn't get it passed? I don't know. You got midterm elections coming up, so I have a feeling that, and this is very normal, that what's happening is we're just tossing things out there just to see. Remember the PayPal thing from yesterday? Just toss it out there and see what people think. Whoa, okay, you're scared? No, all right, we won't do that, right? Gig workers, should you guys be employees? Let's see. No, nobody cares? Oh, okay, let's try something else. Let's go back to, I don't know, racism or whatever fires everybody up. That's what happens around midterms. That's the honest conversation there. I don't know what the next thing is, but it's certainly not going to be Miss Pelosi and her trading going on there. I guarantee you that. They're not going to throw that out there. You know who's good at that, by the way, testing the waters, was Elizabeth Warren during the Democratic nomination primaries there. I don't know whether you like her or hate her or whatever. It doesn't matter, but she did a good job of actually throwing out an object and seeing if everybody would bite. And then the second they didn't bite, she threw something else out. And when she hit on something, like the taxing the rich and particularly focusing in on people, when she hit on that, she stuck with it, right? So there's going to be a lot of that going on. And, it's kind of like marketing in a way, right? You try something. If it works, hey, let's do more of that, right? Anyways, that's all I got for you here today. We will get this thing fired up. I'll try to answer some of your questions if I can answer your questions. And hopefully you learned something new. Let's see where the questions are, if I can find them there. Yeah, I almost forgot to hit that like button, huh? Yeah. Well, so that's a good comment. He says, well, it's the best 90 days, right? But unless the inflation numbers are high, then we get a big drop. I get that question a lot, actually, a variation of that question. When you say, Dustin, you show expected data going forward based on what happened in the past. But you're forgetting that this time's a little bit different. Every time was a little bit different, right? There's no linear path to growth or your goals or your investment returns or whatever. There's always something that tries to hit you right along the way. That's hopefully what gives you the reason to buy. So every time there was something, this time there most certainly is something. There's many things. The next time there will most certainly be things. That never changed anything in the stats going all the way back to 1928 when we first start tracking the S&P. There's always something going on. So never let that scare you, because you might find yourself going, well, that's great that this is the best 90 days or the returns are expected to be like average or whatever, but not this time. This is the end of the world. And, come on. How many other times could we have said that? you can't take it out now if you won't take it out back then. So if you were to go back and say, ooh, World War II, that was really nasty. Let's take out all the performance from there. Can't do that, right? I mean, you could, but it wouldn't be advantageous of it to, because you're now saying that that event was as significant as this event. And who knows? That's a tough one to say. Yesterday we said inflation 8.6 means 7.6. Sorry. Yep, 7.6 is the magic number there. I hope we don't get 8.6. So if I said that, no, 7.6 would be my guess. And it's just purely a guess, actually. Yeah. Hey, Dustin, now a good time to roll over your 401k or wait for a market recovery? Well, is there, like, it shouldn't take long. But if you roll over your 401k and the market goes lower, you won, right? Hey, you were out of the market for that little bit of time. If it goes up, yeah, you'll feel a little bit bad there. But I wouldn't look at the market recovering as a decision. I would look at the volatility declining. So right now we have these wild days just going nuts and everything. As soon as the market goes, all right, we're good, not really moving around much day to day, do it then, right? There you go. Boeing seems to be holding at current levels. You like that? Is that a good thing for you? Well, I guess I would say to define what holding means, pretend that you're programming a computer and you're saying, hey, this means that it's holding at this level, 5 days, 10 days, 3 weeks, maybe a lack of selling pressure on certain days. So first of all, I'd have to have that defined myself there. But I would agree that generally it's holding right now. With some of the weakness we've seen over the last couple of days, notice how Boeing hasn't really sold off. But generally, I'd give you that one there. Yeah. Which one of the FANG stocks looks more discounted to you? Do you put NVIDIA in there? If you put NVIDIA in there, that would be my pick. Yeah. How are we looking till the end of the year? Got a lot of growth in your portfolio, meaning you got a lot of growth stocks in your portfolio. It's going to be a wild ride. Remember, midterms are coming up as well. I was going to do a video on that. Somehow that got away from me today, but we'll talk about all the performance wrapped around midterms, whether one side wins, the other side wins, or there's a split government and all that. I've got the data to share with you. Any thoughts on Tesla, the 1 week chart, 200 moving average? Oh, look at you go with that technical talk there. The end of the day, there you go. Tesla is extremely oversold in the short term. It is extremely oversold to a point where people believe, hey, it bounced there before. Maybe it bounces here again. There will be at least people that take a shot. You will see Tesla attempt to bounce off of these prior lows. Maybe a little bit more to go there. Whether that's successful or not, I don't know. But that is what and people like you probably look at and say, oh, hey, makes sense. Hey, if stats are so important, so are technical patterns that predict those stats. If pattern plays out, we're on track for greater than 40% correction. I bet you I did bet you for a reason. Did you see the notes from Jazz this weekend? So I threw you a bone. Me and Ashish got a little bet going on here. I threw you a bone on that one. Did you know that the correlation to the market so far this year and the year just before 2008 is 81% identical? Meaning you take from here 12 months back, factor in all the backs and forths, right? Just plot it on a chart to make it simple. Then go 12 months back from the start of the financial crisis, almost identical. How's that scare you, huh? I don't mean to scare you, but it throws Ashish a little bit of a bone there. Hey, I'm going to wrap it up for the day. Get going. Got some things to do today. The day is not over. You guys enjoy the rest of your day. I appreciate you guys hanging out with us here. If you're looking for a financial advisor and you're like, hey, I just need someone to help me with my retirement accounts and every other thing that I can get along the way, then I hope you'll check us out at jazzwealth.com. That's our goal. We don't want to just be the planner, the advisor, and go, all right, good luck. 20 years from now, I hope you can retire. Everything. Every question I get from clients is, I'm about to put money down on a house. What should I do? Should I buy down my mortgage rate? Hey, Dustin, I'm thinking about real estate. I'm thinking of maybe buying something in 2 years. I'm thinking about going and letting my mom move in with me, but then I'm going to move out of the country. I saw you there. So happy to help with all that stuff. Love that part of the game. We'll be back to play this game here tomorrow. So hope you have a good rest of your evening. See you then.